Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Employers Holdings Inc. quarterly report. Employers Holdings Inc. provides a range of services to small businesses across the United States. The company's key offerings include workers' compensation insurance products marketed through various channels, plus local, regional, specialty, and national insurance agents and brokers, plus national, regional, and local trade groups and associations, plus direct-to-customer interactions. These services cater to businesses in low to medium hazard industries. Employers Holdings Inc.'s stock price drop. A year of disappointing financial results and rising claims costs over the past year, Employers Holdings Inc. EIG has experienced a significant decline in its stock price, plummeting by over 18.16%. The primary cause of this drop is attributed to a series of disappointing financial results and increasing claims costs. Key events contributing to this decline include third-quarter net losses, rising loss ratios, and weaker growth outlook. In the third quarter of 2025, EIG reported a substantial net loss, exceeding analyst estimates. This was largely due to increased loss and loss adjustment expenses ratio, which rose to 97.1% from 63.1% in the prior year. The company's combined ratio also reached 129.7%, indicating significant underwriting losses. Furthermore, mixed results in the second quarter of 2025 and a decline in net income in the first quarter of 2025 added to the company's financial woes. Analysts forecasted a decline in earnings for EIG, with an expected average annual earnings decline of 13.5% for the next 3 years. The stock has struggled to regain momentum, reaching a 52-week low of $43.11 in July 2025. Institutional investors, who hold a significant portion of the company's shares, have also taken notice, potentially leading to further actions that impact the stock price. The combination of these factors has led to EIG's stock price drop, making it essential for investors and analysts to closely monitor the company's financial performance moving forward. The primary drivers of revenue growth or decline can be identified from the financial summary provided. Revenue growth is primarily driven by an increase in net premiums earned, which rose by 2.9% for 3 months and 2.5% for 9 months ended September 30, 2025. Additionally, net investment income increased by 6.2% for 9 months, contributing to revenue growth. Net realized and unrealized gains on investments also saw a significant increase of $10.3 million in 2025. On the other hand, revenue decline is attributed to a decrease in net investment income by 1.9% for 3 months ended September 30, 2025. Total revenues also experienced a decline of -$15.3 million for 3 months and -$24.1 million for 9 months. Net income and profit margins decline. A shift in the company's financial performance. The company's net income has undergone a significant decline, decreasing by $56.1 million, or 63%, from $90.3 million in 2024 to $34.2 million in YTD 2025. This downward trend is also reflected in the third quarter of 2025, where the company reported a loss of -$8.3 million compared to a profit of $30.3 million in Q3 2024. The decline in net income has led to a decrease in profit margins, with the combined ratio increasing from 100.4% in 2024 to 129.7% in 2025. The loss and LAE ratio excluding LPT also saw an increase from 63.9% to 97.8%. However, some expense ratios have decreased, including commission expense 13.8% to 12%, and underwriting expense 23.5% to 20.6%. Despite these decreases, the overall impact of increased losses has outweighed the benefits, resulting in a decline in profit margins. The company's financial performance indicates a positive trend in generating operating cash flow. Although there is a decline from $63.3 million in 2024 to $44 million in 2025, it remains a significant amount, suggesting that the company is still capable of producing substantial cash from its operations. Management is optimistic about the company's outlook, citing several key strategies to drive growth and profitability. The company aims to target small to mid-sized businesses with higher profitability and stronger persistency, while pursuing profitable growth opportunities through disciplined underwriting, claims management, and technology investments. The company has achieved a record number of policies in force and driven growth in gross premiums written through increases in renewal business premiums. Management is also focused on expense reduction, leading to a decrease in underwriting expenses. In terms of risk management, the company is emphasizing accelerated settlements of open claims, diversifying risk exposure across geographic markets when appropriate, and leveraging data-driven strategies to target profitable classes of business. The company maintains a strong total capital position with adequate liquidity for the next 12 months and longer-term period thereafter. Management is committed to managing contractual obligations and commitments, including lease payments, other purchase obligations, unfunded investment commitments, and unpaid losses and LAE expenses. Overall, management strategy focuses on profitable growth, risk management, and expense reduction, positioning the company for long-term success. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In Q3 2025, it paid out $0.32 per common share in dividends, totaling $22.8 million for the 9 months ended September 30, 2025. Additionally, the company repurchased 1,049,401 shares of common stock for $45.2 million during the same period, and a total of 3,987,903 shares for $133.8 million over the 9-month period. These actions indicate that the company is actively managing its capital structure to benefit its shareholders. That concludes the financial summary for Employers Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.